We were talking about this earlier. A lot of folks, myself included, might have thought at the beginning of the year GE looked pretty bad. That was, before it dropped another 50%. How much more can the stock fall?
I think it's going to be sentiment driven from here. I think people have factored in as much as they can valuation wise. Now it's just a matter of how much capital they need to transfer to GE Capital. What becomes of the power segment? What's the time frame to get profitability back up? And what comes out of the government SEC DOJ investigations into past accounting?
Well, so what do you think the new CEO can do here? I mean, if nothing else, he's got a stock that has tanked that can kind of set up a period of performance where he can, in retrospect, say, look, I've taken all these steps and I've set this thing back on a path to profitability and growth. What does he have to do, Chris, to get there?
Yeah, well, there is a lot of heavy lifting, to be sure, and a lot of execution. They're not there yet, and they have to get to a point where they can say, now we are here for smoother sailing and to start to improve. But, there's stuff on the horizon, too. There's a 2021 change in accounting standards for long-term care insurance that they said would have a material impact. We believe that means to GE Capital book value. So it's not like they can plug the capital gap at GE Capital right now and then it's done and visibility emerges. So they're liquidating lots of assets right now, both on the industrial side and the GE Capital side because of the escalation of the liabilities. But we see no scenario where they need to monetize the majority of the businesses. So there is a shareholder stake that survives for sure. The debate that won't, we think, is pretty silly. But the amounts of some of the pieces that they're liquidating that are retained for equity owners is very much a subject for debate.